When you build an investment thesis, what are usually your big targets? Is it revenue focus? I know this obviously depends on the strategy and the deal.
Yes, it has to fit the strategy. If it doesn't fit the corporate strategy, we're not terribly interested. As I said, a lot of things can look good on paper. So we're very analytically driven in terms of understanding, what are the unit economics of this business? Is this business really going to be able to scale? If it's not profitable now, what has to change in order for it to become profitable? So we really start from a bottoms-up perspective of, understanding what's the unit economics, what's the fundamental profitability of the business, and how do we think it scales? And then based on that, we ourselves are valued based off profits and cash flow, right? So that ultimately is how we value the companies we acquire. We're, a company that drives a ton of revenue but never makes any money is not terribly interesting to us because it's not going to ultimately create any real value for us because that's not how we're valued by the capital markets and our owners. So ultimately, the company needs to be able to drive meaningful EBITDA and cash flow for us, and that's how we're going to value it. Doesn't mean it has to have huge EBITDA and cash flow today, but it's got to justify. We have to justify the valuation based off its earnings, not on some theoretical revenue multiple.